Welcome to Real Vision's Trade Ideas. Today we're sitting down with Michele Mish Schneider of MarketGauge. Great to have you here.
Thank you, Justine. Great to be here.
Now I want to congratulate you, Mish. You are the official winner of Real Vision's Best Trade of 2018. We are presenting you with this Wall Street bull.
Oh, wow, great.
Yeah, for you to put on your mantle at home.
Thank you.
Yeah, very nice. And so this was for your trade of 3D Systems, ticker DDD. You came on in April. It was trading around $10 at that point. Now that was an amazing call, trading up 100% in just a few months. So congratulations on that.
Thank you.
And especially because this wasn't an option or a derivative. This was a specific call on a stock. So particularly amazing. Now, I do have to mention that you did come on again in September to talk about getting back into the stock. You were looking at the 19 level with a target up in the high 20s. You did get stopped out on that at about 16 because the stock did turn around. Now it's trading at about $11 or $12. Could you give us an update on your original thesis and where you see the stock going now?
Well, first off, in April, the market had come back from the big decline in February, so it showed a lot of resiliencies. And everything was in a bullish phase at that point in terms of the indices, but DDD was floundering. It was in a bearish phase. So it felt incredibly undervalued to me at that point, considering it's an industry that I think has a tremendous future, and I'm not the only one who thinks that. So we can review a little bit about 3D Systems and why I'm sort of obsessed with that stock. I almost feel like Brokeback Mountain, I can't quit you because I still love that stock. What 3D Systems does is it makes 3D products for a broad scope of industries: aeronautics, automotive, medical, dental, jewelry. And now what they've been doing is they've been licensing with different companies, like, for example, BMW has a deal with them, Stryker Medical has a deal with them. They're even doing basically 3D surgical procedures so that you can actually practice the surgery on a 3D model virtually before you actually do the surgery. So there's no doubt that this is an industry that is here to stay. So 3D Systems in particular is really the first one that invented 3D printing, and B, has been the major innovator in terms of products. So I still think that they're a company that's extremely solid.
So can we talk a little bit more about the fundamentals here? This company you see poised specifically to grow from the more so corporate side rather than me having a 3D printer in my home, the consumer side?
Well, both actually, but right now it's growing more on the corporate side. And that's a really good question because, like solar, there's a point where people say, what is cost effective? So right now, if you can get your money back in 2-3 years by making an investment in 3D printing, that would be cost effective. If it goes longer than that to get your money back, then obviously it wouldn't be such a great decision for a lot of companies, and definitely not for the retail space, is that it's just not cost effective. Will it get cost effective? I believe at some point it will. So we're really looking at it as, I think, an aid to humanity in terms of what it's been able to do. I mean, we go to the medical, it can produce an ear. If somebody loses an ear, I saw a child that lost a hand and had a 3D printed hand. I can't imagine that from a fundamental standpoint, this company won't grow or be bought out by another larger company.
And you see corporations actually buying the 3D printers themselves rather than necessarily, sending something to a lab.
Yes, like NASA is using it, and BMW is using it because automotive parts are actually cheaper to produce and also lighter, so for ergonomics of a car, it's better. And that's why you're seeing these companies starting to make, because if they can save money and make things more dynamic, then that's a cost of savings to their consumers. So even though the retail space is not in it, like you and I don't have 3D printers in our house, we are actually buying and hopefully saving from companies that are using 3D printing to make their products more efficient.
Could you talk a little bit about how their earnings have been?
Well, it was an incredibly serendipitous timing when I was here in April, because most of their earnings reports, this is a stock that used to trade up near $100 a few years ago.
Right, in the 2013, 2014.
Exactly. And so a lot of people, when I actually put out that recommendation, I saw the naysayers like, oh, this company is never going anywhere, it's probably going bankrupt, etc. But I saw it a little differently. When I really delved down into their earnings reports, I saw that one of the reasons why they hadn't really reported well was because they make a huge amount of investment in their own products and in their own company. They're big into IT development. They want to stay the innovators. So it's actually kind of an interesting company that they're more concerned about their products than they are about the bottom line to their shareholders.
Kind of like Amazon.
Yeah, exactly.
In some ways.
Which, by the way, Jeff Bezos, if you're listening, 3D printing would be a great company for you to buy. But first we have to get everybody back in it.
Yeah.
Yeah. So when I came in, the second quarter earnings hadn't happened yet, and actually I specifically said that they were happening in a few days and that I would wait for the earnings to come out. And then it was the first quarter in a really long time that they showed a profit. And that's why the stock doubled so fast. It was like a mind-blowing rally right off, out of the gate. Smart or lucky, doesn't matter. Point is, it worked. So now if we go to the third quarter, which happened in November, why we're back down here and why the September trade turned out to be the loser. And that 16 stop was because it had gapped up after the earnings, over 16, after like the second day or so of the earnings. So I said if it broke that 16, that would be the end of the trade. So we gave back money, and now here we are with the third quarter earnings going right back to what it showed in the past. They are making investments once again. And so they are much more concerned about trying to get their investments and their products done and their operating costs down. And then I think there's a possibility that we could start seeing profits again. But we have fourth quarter earnings coming up in January, and there is absolutely no reason to be a hero at this particular point. I would probably wait.
Okay. Is this more of a long-term trade?
To me, this is, I think, one of the best long-term trades. Yes.
So would you get in at current levels, or would you like to wait a little bit?
Well, I actually am already in the stock. I feel like you have to have a core position in this, or at least I feel like I have to have a core position. It would almost be more worthwhile for me to lose money if it broke under 10 than to not be in it if all of a sudden things started to really move. And that's how I look at it. However, that's not necessarily how I would tell the public to do it. So currently, with the market down over 10% from the highs, what's interesting about what's going on with 3D printing right now is that stock has actually, after the dismal third quarter results and it gapped lower, it's been consolidating. When I came on the show, it was trading under 10. This was back in April. So there's really your parameter. So if you were a bottom picker type trader, then you might say, okay, it's been consolidating roughly between 11.17 and 13. If it gets back over 13, I know what my risk is under 11. Or if you wanted to buy it now, I know my risk is under 10. It's relatively limited. But at this point now, with it being in a negative phase, and the reason why it worked so well was that it flipped into a bullish phase after being in a negative phase back in April, and now with the third quarter back into a bearish phase, is waiting really for the phase to improve. And so that would mean probably getting back over 13, 1340, where the moving averages lie right now. That would be the most conservative way to trade it.
And what sort of target do you see it potentially hitting?
Well, you know, I still think that it can go up to 28 to 30 initially. You know, we were looking at like 23, it got to 22, close enough. And by the way, when something like that happens, you assume that people use good trade management and have trailing stops and a profit target in place.
And you also, I should mention, you were taking profits at about 17 on the original trade. So the fact that it went up to 22, you still took profits on it.
Exactly. And when you get that kind of a move, it's usually smart to lock in some type of profit. But for now, as I said, I have a very small core position. My subscribers, though, do not. I'm going to be much more conservative for the public at large. So there are several ways to look at this stock right now. Number one is, I mentioned I have a core position, and the reason why I have a core position is because I want to make sure that if the stock takes off, I'm in it at least for some amount, and I can always add if it shows strength. If it goes down, it's certainly not going to be terribly concerning because this position is very, very small. It won't really impact the P&L in any negative way. For the public, though, I would think that there's a few choices depending on the taste of how people like to trade. Some people do like to do exactly what I do, have a small core position near a bottom or a perceived bottom, and then just forget about it, put it away, or have some rock bottom stop, like let's say under 10. Others, I would say using the phases would probably be the most conservative way. With the market in the bear phase, if this actually improves in phase, then it joins the ranks of a stock like eHealth. It now starts outperforming the market, and that is a really good situation that you want to be in. That would be a move somewhere over around 13.5. The moving averages are fluid, they move. The third way would be to wait for the earnings report to come out January 24th, because even though they've been doing back into investments, who knows, maybe they'll have ceased that for the fourth quarter and we can see a pop that way.
What do you see as the biggest risk here? Is it really just the next earnings report that you're waiting for, or are there other risks that are lurking?
Well, I mean, there's always the risk of the earnings report, and as this company has proven now, except for the one quarter, which helped me win my beautiful trophy here, it likes to make investments. So there's that risk that it's still doing that. But my sense is that it's just exactly that. This is an industry whose time has not come completely yet. And that will happen. So for me, if I were creating a stock portfolio for my grandkids, I would probably want to have DDD in that portfolio.
Still the early days. All right, can you recap this trade in 30 seconds?
Okay, so most conservative, wait for a phase change, which means it would have to clear the 50-day moving average, which would happen somewhere around 13.5. Have a stop in under this last swing low of 11.17, or if you wanted to go a little bit wider, under 10, or the low that we had in April, which was under 9.95. And then just sit and hold it. If we can get a move back anywhere near 20, you can look to take some profit. There is a gap to fill, by the way, at 15.25 left from the last earnings report when it gapped lower. If that gap gets filled, I would think that to be a very bullish sign.
Well, great. Mish, thank you so much for coming back and reviewing the trade.
Thank you again for my trophy. This is awesome.
I hope you display it somewhere very prominently.
Oh, it's going on my trading desk for sure.
Oh, perfect. You'll have to send us a picture.
I will. Thank you again.
So Mish revisited her trade on 3D systems. It was Real Vision's best trade idea of 2018. She now suggests a few new ways to play the stock. One way is to hold a small position with a stop loss at 10. The second way is to buy at technical support above 13 with a stop loss at 11. And finally, the last way is to just wait for more clarity regarding earnings. Just remember that this is a trade idea and not investment advice. You should do your own research, consider your risk tolerance, and invest accordingly. For Real Vision, I'm Justine Underhill.